Investing in stocks, bonds, mutual funds, crypto, NFTs, and business is going to derail you in your quest to achieve financial freedom. You heard it right. If you start with the complicated asset classes, you will end up losing your hard-earned money. Yo, what's up everyone? This is JM Ang, your logical and easy to understand numbers guy. And today we're diving into a crucial topic, 5 investments that are perfect for beginners. Whether you're just starting out on your financial journey or looking to expand your portfolio, these investments are designed to be easy to understand and practical for anyone aiming to build wealth over time. By the end of this video, you'll have a clear understanding of what to begin investing in to secure your financial future. Investment number 1, savings accounts. Let's start with the basics. This is one of the safest places to put your money into. It's like having a secure piggy bank where your money earns interest over time. Yes, the traditional banks usually offer below 1% per annum, but if you look into digital banks, right now they're offering very competitive rates from 3.5% to a realistic 8%. While the interest rates may not be so high, it's a good starting point to build your emergency fund and save for the short-term goals, while having your capital secured and protected. I remember when I first opened my savings account. I opened my account 6 months after started working. Funny thing was, I started using yung mga envelope system. And I started labeling different envelopes as investment fund, grocery fund, travel fund, meals. Yes, kung di ko makakalimutan, yung senior ko at work said to me, "Jim, para ka naman lola, magbukas ka nga ng bank account." I made the time to go down to our office building and open an account in the enterprise building branch. It was a small step towards financial security, and I felt so proud to hold my very own passbook. Investment number 2. Index funds. These are like baskets of stocks that track the performance of a specific market index, such as the Philippine Stock Index. Ito yung super simplified way of investing because index funds automatically spreads your money into different industries. Imagine investing in the top 30 largest and most active common stocks listed at the Philippine Stock Exchange. They offer diversification and are managed passively, making them a great option for beginners who want to invest in the stock market without picking individual stocks. When I started investing in index funds, it provided me with a broad exposure to the market, and these are mostly composed of blue chip stocks or well-known companies who have very low likelihood na magsasara. Imagine immediately being exposed by investing in known companies like SM, Ayala Land, Meralco, BPI, PLDT, to name a few. Another thing I like about index funds are its low management fees. So in case market does not perform well, it doesn't add too much gas to the burning stock when markets experience volatility. Investment number 3. Mutual funds. Mutual funds pool money from multiple investors to invest in stocks, bonds, or other assets managed by professional fund managers. They're convenient because you can invest even with small amounts of money, and you benefit from the expertise of these experienced managers. One of the principles mutual funds focus on is leverage. Yes, you are leveraging on the expertise of fund managers instead of you studying every single publicly listed company and choosing which to invest in. You are letting someone else do all of the research work for you. They usually have a higher management fee compared to the index funds, but what's nice about mutual funds, they usually provide a regular update on how these funds are doing. This allowed me to have access to professional management of my own investments. Depending on the fund you will choose, they have fun fact sheets on what specific vehicles they are invested in. Cool, diba? So instead of researching each investment vehicle, just research on the particular fund and how they're performing and if they're doing well and for what purpose you want to invest in them. Investment number 4, retail treasury bonds or RTBs. For those looking for low-risk investment with fixed returns, sa mga finance people, ito yung tinatawag nilang risk-free. Retail treasury bonds issued by the Philippine government are a great option. You can get them from the bank, and they have options from short-term placements from 30 days to 180 days. They offer predictable returns and are considered safer than stocks, making them suitable for very conservative investors. I didn't actually understand why big companies buy RTBs. But when the time came and I had enough funds to set aside for RTBs, it all made sense. It gave me that confidence in stable returns so that when my other asset classes do not perform well, it's guaranteed to give you passive income. Side note lang, medyo mababa talaga yung returns ng mga RTBs, around 3 to 4% or maybe lower. But if you don't have plans for your cash sleeping around, you're not that confident in putting them in digital savings accounts, then this is a safe option for you. Investment number 5, real estate investment trusts or REITs. Real estate investment trusts or REITs allow investors to own shares in real estate assets without owning physical properties. It's like having a share in the profits of big real estate companies that lease out their commercial properties. They provide regular income through dividends from rental income and can be a good addition to a diversified portfolio. What's nice about REITs are that REIT companies are required to distribute 90% of their net income as dividends. Not bad, right? This type of investment averages 4 to 7% per annum based on the July 2024 prices, and exploring REITs broadened my investment horizon because it's being exposed to buying real estate without the huge capital of buying them. The downside I see for this is that since it's listed in the stock market, it is prone to price volatility when there are suddenly a lot of traders buying and selling these stocks. Regardless, if you choose REITs with reasonable room for growth, you don't only earn dividends on a quarterly basis, but you also get to experience price appreciation as the underlying real properties will naturally increase in value over time. And there you have it, 5 investments that are perfect for beginners. Remember, the key to successful investing is starting early, diversifying your portfolio, and staying informed. If you found this video helpful, and don't forget to like, subscribe, and share with anyone looking to kickstart their investment journey. Until next time, happy investing!